2023 seems to be hell of a mishmash and head scratcher for market one-side positioners. 2021 and mainly 2020 has favored bulls. 2022, however, belonged to the other side, to the bears obviously. This year seems to get dominated by choppiness and rapidly changing market conditions. But there are certain asset classes that may be predestined to gain even when the economic background doesn't seem too obvious. If you want to know this and other things related to current market environment, if you want to know all that nitty-gritty that moves the market in this or that direction, you couldn't get any better. We are broadcasting live every session, every day session now at 8:45 a.m. East time. So thank you very much for tuning in, and without any further ado, let's get into first new episode. All right, and we are at the economy view session. What we got out there? The question at first we need to answer whether it's another paralysis for the economy. So we are after around 2.5 years of striving with staving off this virus COVID-19 that has brought kind of a shaky time for the market globally. Right now, China told that it's about to reopen. As Chinese governor said, the key to the economic recovery is to convert current total income to consumption and investment to the largest possible extent. But we have some other problems around the corner, and of them is a sub-variant of a COVID that's called Kraken. That's right now spreading very fastly around Malaysia and Indonesia, and that's supposed to be the most transmissible sub-variant which has been detected yet, said recently Maria van Kerkhove during a press conference on the beginning of January. Only around 30 countries have reported cases caused by it yet, but health authorities are warning it could be much more widespread and silently proliferating thanks to a drop off in testing. So those very brave and audacious projections of Chinese government might be silent by that event that we are right now approaching New Year's Eve in China, which falls on January 21st this year. So that's where thousands, millions of people are gathering together in order to have a good time. But this time, due to this COVID-0 policy being eventually cancelled and backed away from, we may see another wave of wave spreading through the economy. So another wave of possible COVID problems might hit the economy in the first half of February. So right now, that's a rebound optimism that's widespread around commodities as well with emerging markets. But we don't know whether Chinese economic growth will return to its normal path, and whether the governors won't bend eventually to these more restrictive measures. Much more is yet to be seen, but the optimistic forecast has brought to us a Goldman that right now doesn't see euro area recession in 2023. So it's very optimistic, and it's something that also is a aftermath of recent very good performance of European indexes. What's next? Perturbations not leaving China. So from China to China, once again, Jack Ma, superstar entrepreneur, gives up on, and as the founder, Ma owned over 50% of Ant's voting rights, despite not being a director or member of the company's board of directors. After restructuring, mass voting rights will drop to around 6%. So, Ant was about become a behemoth on the Chinese market, where they will have prepared for going public. But the most important thing to go public needs is to set up a financial holding company like a regular bank. Its application to the central bank for such a license was set to be nearing the final stages back in June. But it also needs a blessings from senior Chinese leaders and a wide range of government agencies. Unofficially, at least. So right now we have going through the cancellation of Ant's IPO kicked off something that kicks off a series of regulatory actions that have changed the playbook for the nation's tech champions, which had prioritized growth at all costs. So Jack Ma seems to be once again in trouble. Back in 2021, he largely disappeared from public view after giving a speech criticizing regulators on the eve of the scuttled Ant IPO. And it looks like China, even if it would like to invite more and more entrepreneurs right now, it's not a safe haven for them. And large money likes stability. So that's definitely no where those billionaires would be coming, unless something will change in the Chinese policy, as it was with COVID measure related to the economy. So we need some more of the permeating changes, some more of a thorough clearing, I would say, clearing mindset out there. But with such socialist and even communistic governors, ruling parties, it's, I would say, very, very off the table as for the present being. We are heading next for the kind of a dispute whether we are able to go through a soft landing. There is in comparison of periods where we had a soft landing and hard landing. So on green you have a soft landings, on yellow hard. So right here you have had the one of the soft landing that was a savings and loan crisis, mini crisis. The next was a bond market crash in 94. And back in 2018, we've seen a 20% market drop and also a mini recession, but it's not something that might be called a recession in a broader sense of a spectrum. So back then, in any of those times, we haven't observed neither over 20% slump nor two consecutive months with negative GDP during the particular time spans as it has been seen this time of 2022. So right now I would like to get you to another slide and just have a look at this. The only soft landings 1985 and 1995 in the last 40 years, maybe with this one soft landing that's maybe not marked right here at in 2018 and 2019, but just focus on. I would like to focus you. Focus on those two periods. So the only soft landings in the last 40 years took place after proactive rate hikes ahead of inflation surges and had rate cuts before the yield curve inverted. Also in 1994, the unemployment rate was 6-7%. So it was plenty of slack in the labor market. But this time is different, where we can find that federal funds effective rate and 10-year treasury constant maturity minus 3-month treasury constant maturity right now doesn't converge in the way as it was back before. So right now in 1994 we had kind of a problematic scenario where we were dropping in 10-year treasury constant maturity minus 3-month treasury constant maturity and rising in federal funds effective rate. But this time it looks like we are still hiking interest rates even when these yields are getting below zero. Every single time when it got a zero level, we've seen a rebound in the structure and then lowering interest rates. Right now we get that far that if the recession will eventually come, it will get even much stronger. So this time is some of a different regarding what was in the past. The different factors were labor participation rate, inflation, also global economy, this deglobalization, and other aspects as also serious threat of being overtaken by China, being overtaken by China regarding U.S. economy. So we right now, I would say, somewhere teetering around and somewhere teetering between soft and hard landing, but it looks like there are more elements that indicates that the hard landing will be, if it comes, even more difficult to tackle. So that's why we need to be very cautious in terms of any type of rebounds on the market. This recession may postpone, but those problems won't won't go away. All right, so right now market outlook, and for this one I'd like to show you Fear and Greed Index put and call options. Right now it changes from fear to neutral, so it means that we are right now achieving a level of 1.0, and we are getting out of this bearish territory, so it's positive for the markets, and it's also where the optimism has been seen at major indexes. On Nasdaq right now we on the RSI, relative strength index, have formed a higher highs, higher lows, so it means it's normally a bullish sign for rebound. So also we are drawing a bottoming formation for now, where those drawdowns are getting weaker and weaker. Also MACD on a monthly chart looks like maybe starting to reverse in the weeks to come, with a weekly tendency also getting flattening away, with a significant drop at the lows. So it's normally a positive sign for upcoming reverse. All right. So as a next element, I would show you the crypto outlook, and in crypto outlook I have for you some of a revelation. So about the NAV chart, that's a very important for the crypto market participants. NAV is the kind of a measurement of a sentiment for the market in some terms. So normally when it's around as here at 48.6% at a minus levels, it means that this GBTC shares are traded lower by 48.6% than the spot price of Bitcoin. So it means there's a slightly bearish sentiment on the market. Right now we are getting back to 38.5, so it means something is going on and someone is buying, even if those lawsuits going on by such hedge funds as Fear Tree, that manages $3 billion that right now suing GBTC by selling its GBTC shares in order to cut selling shares to avoid GBTC from further economic problems, and not available and not allow to withdraw any funds for its shareholders. So that's where this section right now has been found by Fair Tree, but it looks like even with this lawsuit, upon which around 20% of market participants, of shareholders of GBTC, has signed. Right now we can find it the smart money are buying such of a bargain that they found, and even this lawsuit won't come into fruition, we may see that that some of the participants are eventually returning to the market. The discount premium NAV is a percentage that calculates the amount the next exchange a traded fund or closed at a fund and fund is trading above or below its net asset value right now. And that's why sorry, I made a mistake. So it wasn't about the BTC, but its asset value. Its asset value right now traded higher. Okay, so it means there is a strictly low sentiment on the market, and that's what is. That's why many of the shareholders wanted to withdraw the money in the or being afraid of problems with and possible even problems of insolvency laying underneath the structure. So that's why this all lawsuit has been kicked off around. All right, so it means there is an underneath strength going on, and Ethereum stakers are available to withdraw ETH from Beacon chain. So recently, stakers got a green light to withdraw Ether from the Beacon chain, with Ethereum's devs aiming to deliver the long-awaited algorithm this quarter. So it may commence in March, and that's a bullish sign for the market. As always, when there is a bear market going on, we are questioning ourselves what is yet bad to come. And this element might be this withdrawals that kind of a desperate Ethereum token holders, I would say this, decide to run away with their, I would say, realized profits, or rather losses this time, as many of them has bought the Ethereum somewhere around $2,000-4,000, and with those running away, this market may clear eventually out. So if I'd like to get you back to where we are at the Ethereum chart, it's very interesting. Right now, we are somewhere around the levels of 11, 16, and what we can find is that we are right now getting out of this downward trend, trying to rebound of this highs of February of 18, and right now trying to build up some strength before next move forward. Another element will be breaking through this triangle that started to form yes, on 13th of August, and there might be very important as well for the market boost if that may succeed. So Ethereum right now also on a weekly basis with RSI right now is moving in this inside of this very bullish, I would say, very bullish flag, and where the pole gets us from 25 points to 38, and with that succeeding, we may find a possible rally forward. But we have a plenty of supply overhead. That's why I would be very cautious when buying anywhere below $2,000. For this one, we would need another very strong demand seen on BTC USDT. But if we just have a look at cyclicality and it's with respect to its 4-year halving cycle, we may find that BTC USD will be summer as it was back 4 years ago in January of 2019 when we had this bottom set in. So that's where we might be looking for. A bottom is somewhere below, around right these levels. That's why slowly but surely picking up discounted BTC, if you believe in its narration, should be somewhat fine, especially with such a low sentiment in the sector as it's right now. But for this one, this falling wedge should be breaking through. Okay, what we have left over is market movers. So definitely market movers is very important this week as we are going through today's Fed Chair Powell speech. It's right away at 3 p.m. So it's around the time. And on Wednesday, we have inflation rate of China, and on Wednesday, it was, yes, on Thursday, we have inflation rate out of US. That's the event that shakes the market the most, and as it used to do that. So, but the forecast is lowering, so it will be very difficult to surprise the market to the upside. But I would expect that this one also will bring some robust growth in the coming days, even if it will be just as forecasted at 6.7, as it's quite optimistic if you ask me. And we are expecting GDP from Great Britain to drop after previous terms, and any single neutral positive level would be suppressed for the market and another catalyst to growth. You may ask me any question you like on the chat going live. So I will get back to this as soon as possible. And on Friday, we are going through, for instance, Goldman Sachs. Was it Goldman Sachs? Why cannot see this? Goldman. When do we have a Goldman Sachs earnings coming up? Could you write me down in the chat? Maybe anyone knows? All right, doesn't matter. We'll get back to this later. So we have on Thursday Taiwan Semiconductor and JP Morgan, Bank of America, Wells Fargo, BlackRock. On Friday, that's the earnings that may set the scene for the next weeks, especially for value stocks. So that's why it's worth watching. All right, and we are right now jumping to trade idea, and I know you have been waiting for this. We are jumping to today. The chart that I want to point you is natural gas. So it's kind of a recently going through a slide, but right now we are approaching another very strong, I would say, very strong support. So it's a support having built on December of 21 and has been tested twice, and this time also we've reacted to this. So on 6th of January, that reaction has been built on a 4-hour chart. We've built somewhat as engulfing pattern, especially seen on a hourly. But for this one to get respected, we do need a somehow large volume coming up right here at 3.46. Without this, don't even try to catch the falling knife. So it will be very important how it will close this candle and the 4-hour candle as well. We still have a chance to rebound from this. Otherwise, it will be very, very heavy room to draw down even further, as we have another stop right at another lower levels of 30%, somewhere around 2.30, 2.40. So it's on a daily chart we can find that right now it doesn't look very optimistic, but we still haven't closed the day. That's why the possible rebound right after a Fed chair speech will be very interesting. So this closing will be very interesting. And if it gets up, if it rise up, I would see another rally to at least this downward line, where we get possible rebound and maybe move downwards even further, or rebound it to the upwards and move to another higher highs. So with trading board, if I'd like to set this up, it will be something with the possibility of going from 3.46 to 3.84 with a stop loss around 3.38. So it's risk reward ratio at around 5.11. So it's very, very decent. So you may enter the position anywhere between those borders of a blue box that's set around that's set around 3.44 and 3.48. Sorry. So it's interesting how it will end up. And for me, right now, I'm not taking any position, but will react regarding the close to take place. So that's it in today's episode. Thank you very much for being with us, and see you tomorrow, 8:45 a.m. East time. And have a great